Thank you very much, and good morning. I'd like to acknowledge that Charles Woodfield, the chairman of Hexagon, is here with me this morning. And Charles and I joined Hexagon in our current roles around the same time of March last year. And one of the things that we were totally focused on was taking what was a typical West Australian listed junior miner explorer out of that exploration resource focus and taking it into a transition to an advanced minerals business. And so really we're, with our respective backgrounds, particularly Charles in the lithium space most recently with Galaxy Resources, we're really far more interested in what our customers want rather than the size of our resource and the grade or those sort of mining metrics. So we're not necessarily trying to turn on or push the buttons of the mining analysts, because quite frankly I think they've got a long way to come in terms of understanding the industrial minerals or the advanced materials space. We're very much more focused on getting the attention and raising an awareness amongst end users and other stakeholders, such as the people sitting in this room. And that's why we're presenting for the first time at this conference, is to raise that profile and create an awareness. And perhaps uniquely for the graphite space, we're very interested in collaborating and sharing technical opportunities as well as more commercial arrangements. So our business strategy is to build a vertically integrated graphite business. We want to focus on the high spec end, the high purity materials, and we want to service high-end users. And that includes substituting for synthetic graphite. Hence the silly joke yesterday about our synthetic graphite mine. But we'll be talking about that a little bit more. We want to move our business downstream, not because we have to. We've got nothing to hide in the ore body. The ore body is pretty much what it is. It's because we can. The attributes in the deposit allow us to go down that value chain. Sort of a silly way of phrasing it perhaps is to say that we're really more focused on creating materials that will end up in spaceships and rockets, more so than will end up in Teslas or EVs. That's the theme that I'd like to pursue through this morning's presentation. Quick snapshot on Hexagon just to set the scene. We're an Australian listed company, been listed since around 2011 and been in the graphite space since around 2013. We have around $7.5 million in cash. Our share register comprises around 25% institutions, of which the Tribeca Natural Resources Fund holds about half of that. We also have a shareholding from a significant Australian mining group called Mineral Resources Limited, who have 3.5%, and I'll refer to them again later. But in essence, as I said, the snapshot is that we are presenting ourselves as an emerging, low-risk, funded graphite business. We have a stage 1 project located in Western Australia, and we have this intention and the skill set to take our business downstream based on the technical attributes of the material, particularly at our Mcintosh deposit. This is how we characterise the business as we go to execute that business plan. We like to characterise these key 4 elements. We characterise it as source, which is at this stage Mcintosh with the demonstrated crystallinity and purity of the deposit there. The refining business, where we're utilising a proprietary thermal process to achieve ultra high purity levels at low cost. Product development, which at this stage we've characterised in terms of battery materials, the opportunity to substitute for some synthetic materials, and the larger flake expanded graphite business. That's quite a diverse range there, and it's predicated on the source quality attributes. And then finally, the marketing arm, and we'll talk a little bit about that as well. Off on the left here, I guess a remnant from our mining days. We do have a gold and base metals project that we're looking to vend out or IPO. And if anybody has interest, see us after the show. Yeah. Okay, let's have a look at the source. Mcintosh is our primary source. In some ways, in terms of being a mining project, it doesn't necessarily light up all of the analyst's eyes, but if you look beneath it, lift the covers on it, it's actually a really fantastic deposit in terms of those technical attributes that I'm going to describe shortly. And it's funded. Mineral Resources it's a $3.5 billion Australian listed company, is funding all of the development through to commercial production. So this is a realistic source opportunity. The Mcintosh Project is located in the north of Western Australia, in the Kimberley region. It is an established mining area. We are located close to a major sealed highway that takes us to a port that faces into Southeast Asia. We have a resource, a JORC compliant resource of around 20 million tonnes, and we are drilling there at the moment. MinRes are spending around about $5 million to build that resource up. Now, we think 20 million tonnes is enough of a resource to get us going, and we have preferred to focus our money in the laboratory, making sure that we match up the end user requirements with what our material can be. And then we know that that resource is underpinned by a very significant exploration target, which we will in time turn into a 30, 50-year project. The fact that the project is in Australia, I think also speaks volumes. We don't need to relocate any villages. We don't need to run hospitals or schools. And I guess we have a fiscal stability there that other places don't. This is what the project looks like at the moment in terms of the general terrain, and the shots below depict what we think it will look like. It'll be a multi-pit, open-cut mining operation, standard flotation concentration, treating 2.5 million tonnes of ore a year to produce 100,000 tonnes of concentrate. Again, Mineral Resources will be running this operation. They'll be managing it. They run something like 16 other sites around Western Australia, mining and processing lithium, manganese and iron ore. So they really do provide us with a pit-to-wharf solution. Just have a quick look at this Mineral Resources transaction. We spoke a fair bit yesterday about barriers to entry, and I kind of took exception a little bit to the phrase that graphite has low barriers to entry, because I think this financing is a huge hurdle. You don't have a forward market, debt providers don't want to take price risk. There's all of these things that make it very hard for a junior to get their project up and running. We have a fully funded project, and we've taken a lot of risk out of this because Mineral Resources need to expend money on feasibility completion, all of the construction of the project, all of the ramp up and commissioning, right through to commercial production. Now that commercial production is a really important milestone. It takes so much risk away from Hexagon's shareholders. We've been talking around the breaks a lot about Syrah Resources, for example, some issues they've been having in terms of a new capital raising. The last thing we want to do to our shareholders is come along with bad news where we've missed some targets and then have to raise additional capital. Mineral Resources have got the experience to bring this project online, on time and on budget, subject to completing the positive feasibility, and then they will be running it. That is a huge risk transfer away from Hexagon shareholders. So let's have a look at the technical attributes which we think enable us to provide a high quality but diverse product range. It's underpinned by our ability to purify our material to 5 nines purity. That takes us into a unique world. And I think this is really important in that as we utilise graphite for more and more sophisticated uses at finer grind sizes and things, we want to be able to remove as much risk from that as possible. And one way of doing that for the end users is to be providing a higher and higher purity material. And clearly, we're able to do that. The impurities on our flake sit on the surface, and they are relatively easily brushed aside using a thermal purification technique. The other aspect is that, as I said, previous management of the company was very much focused on providing the battery anode market. And so in the pre-feasibility study that was completed and all the previous test work, they fundamentally overground it. And we never really appreciated the true large flake endowment in the deposit. And you can see here through a couple of graphs that at our Emperor deposit, we are over 85% large jumbo and super jumbo flake. And around the rest of the deposits, we're probably over 70% large flake endowment. So we really do have a genuine large flake abundance with which to work. in terms of creating our product range. And it expands. So our greater than 60 mesh material has quite an interesting expansion factor, around 220%. And that's without any sort of special reagents or anything like that. We haven't optimized this work, but that's a really positive attribute as well. And I guess finally, something that's really exciting and really can't be understated because it kind of drives our qualification in terms of looking to participate in this market that's dominated by synthetic, and that's the crystallinity of our material. We were very fortunate earlier this year to get beam time at the US Department of Energy's facility, the Argon synchrotron giant XRD machine. And the readings that it gave for our material were just outstanding. We're getting maximum spacing, or perfect spacing between the crystal, at the atomic level between the crystal layers, and we're getting large hexagonal consistent crystallinity right through the matrix. And I think this is a quality that not only allows us to compete with synthetic graphite, but possibly also outperform it. So the way this all works, if we look at it as a stage one, so our stage one project is the 51-49% joint venture with Mineral Resources. We have the mining operation, we have a standard flotation concentrator at plant, and we're then looking to produce 3 concentrate products. Let's have a look at the kind of people that we're looking to sell those materials to. So we're really looking into the marketplace so that we can bring that through into our flow sheet. And in the column there, in terms of customers, at this stage we're looking at people that make foils or thermal management systems. We're looking at people that are involved in electrodes and other industrial applications, and I guess that's our graphite substitute area. And then we're also looking at battery minerals in the third product stream. The proportions there are 35% into the large flake, that's greater than 60 mesh, 45 into that greater than 100, less than 60 sizing, and only 20% in the battery metals area. Okay, so that's sort of the production case. If we now look at the refining, because this is really the aspect that underpins our business strategy. And I'd like to share with you an example as to how that strategy impacts. We've spoken a lot about making battery materials, and we've spoken a lot about the traditional flow sheets. And that's what I've tried to illustrate here. So we have the traditional flow sheet taking, say, a 95% con, through a spheroidizing circuit, say 50% yield, then into the acid cocktail, including HF, and then you have a value product. So let's be optimistic and call that a 50% yield. In our case, we're taking a 98% con from the site, we're putting it through a thermal purification process, then into a spheroidizing circuit, utilizing slightly different technology than what's perhaps dominant in China. And from our test work, we're getting a 70% yield to spherical graphite for the anode, and we're also then getting this 5 nines purity. It's not a reject material, and it has a place on the cathode side of the battery or possibly some other uses. We are effectively getting 100% yield. I just make a comment on this purification technology. It is a variation of a fluidized bed furnace, and our testing indicates that we're getting results or costs that will be cheaper than what the acid purification costs are currently in China, which we estimated around $600 US a tonne. Okay, product development. Our product development strategy is really predicated around the fact that we're able to achieve this high purity results. We do have large flake, and we also have thin flake, which is easily milled. And so the premise there is that we are able to have a lower energy input to achieve the size requirements that people are asking for these days. And I think we all appreciate that, particularly in the more advanced applications, electronics, people are demanding finer and finer grained material or size material with tighter and tighter specifications. And I would argue that our material, because of its morphology, enables us to supply that market very effectively, underpinned by that 5 nines purity. Okay, so this is what the flow sheet overall looks like for our entire business or value chain. This here shows the split from the stage 1 joint venture, which is producing these 3 types of concentrates. We then go through our refining furnace to produce the expanded, the electrode, and the battery lines in these sort of proportions. There is clearly downstream processing required, And now we're starting to give you or share information in terms of the specific product lines that we're chasing. Again, foils, thermal management systems, possibly some cathode graphite material. We want to participate in the electrode sector. We're aware, privy to test work where there have been sort of 5 to 10% contributions of natural flake into electrodes, which has significantly enhanced the conductivity of those. And we think there's a place for our material in that, particularly given that crystallinity information that I shared with you, as well as the battery circuits. And so now our challenge is, how do we commercialise all of this? And we have the challenge of trying to transition our stage 1 project, making concentrates, into a fully integrated downstream, fully vertically integrated business. And so we need to transition from selling concentrates, perhaps through a stage where we're selling refined raw material, but I'm talking again about this 5.9 ultra-high purity, so there is real value in that. And then we have to think about how we manage the qualification and the customer acceptance on these downstream products. And the way that we're assessing this at present is to focus on this electrodes line. We feel that we can do a good job on the battery materials, but we think that that's a longer qualification process, and we think we can get into commercial scale production on this line first. It's also the highest proportion of our material. So there'll be a balance between the upstream and the downstream through this transitional phase. And finally, marketing. I'd just like to share with you our thoughts in terms of how people will see our material. And I think people look at what we're proposing to do and say that our flake attributes enable us to supply a diverse range of customers. And I think in that, they will see stability. We're supplying both the energy storage sector, but also traditional industrial uses. And I think stability in terms of continuity supply is important. We actually intend to purchase all of our own material. So that's our ultimate goal, and perhaps we'll be able to take all of the material for the project. We'll see how that pans out. We are doing a scoping study right now looking at this downstream business, and that should be completed before the end of this year. So marketing is about price, and if we look at our stage 1 product mix, we are proposing at this stage to be producing 3 concentrates defined by size, and we've shared here our view as to the prices that we can realise for our material. We are not relying on Roskill or Benchmark or anything anymore for our price assumptions. We actually now have the skill set on board to make our own direct inquiries to Taiwan, Korea, Japan, China and America, and we're very comfortable that these prices are at the moment achievable and realistic. And if you look at those prices and then turn them into Australian dollars, our basket price is Australian 2,000 a tonne. We had a pre-feasibility study that came out in May of last year where we had an operating cost of around $1,000 a tonne. It's not a number that I'm particularly happy with. It's a number that I guess we inherited. It's full of energy costs to grind these beautiful large flake into this fine grained flake. So those costs will clearly come down. But if you just use those numbers and do the maths against 50,000 tonnes a year of allocated production, you can kind of see what our stage 1 earnings multiples look like. If we then look downstream, and some people in the room will recognise their brands, all I'm trying to show here is where we're looking to participate in the market with respect to our downstream business. Right now we are doing test work to look at each of those products that I showed on an earlier slide. We're looking to achieve the kind of prices that you're seeing here from other people that are currently leading market participants, and these prices range from about $6 to $20 per kilogram of material, and that's the space that we'd like to be in, and as I said before, that's where our scoping study is heading. Actually, there's just an interesting observation here that even over the 5 years there's been some quite strong price increases in some of these materials. So the way that we would like to present to people, to our customers, is that we're delivering a high purity material. It's going to be 5.9s. We've got this extraordinary, highly crystalline structure. The technical term is highly ordered pyrolytic graphite. That is quite rare. And we've been able to demonstrate that we have it. We have this flake morphology that lends itself to low energy input, i.e. low cost, milling and sizing. And we've demonstrated through test work we have very good electrochemical properties. Take a step back, I think what people will also see is that, as I said before, we have a diverse business. We're not a one-trick pony. So if one side of the business is down, the other side of the business will sustain it through, and we can carry on maintaining supply to customers. They will also see the enhanced technical performance, and I think they'll also take a lot of comfort that we are using environmentally sound processes in a stable jurisdiction such as Western Australia. And just to conclude, our milestones or our timeline, we have a very large drill program out there at the moment. One of its core objectives is to generate a lot of samples so that we can carry on with gusto on this downstream processing test work. And in that stage 1 program being managed by Mineral Resources, there's feasibility study work and everything else happening. There is a contractual timeline for that. That work's got to be finished by October of 2019, but I can assure you everybody's working very hard to get that work done as quickly as possible. The process that we control 100% is this downstream work, and our immediate goals are to get a pilot fluidised bed roaster up and running, and then we can start to access concentrate material and be able to run that furnace and be able to share sample material with potential customers and get that brand establishment process happening. We've got that scoping study that's in progress and due for completion by the end of the year. So that brings us to the end of the presentation. I hope I've left you with the impression of a realistic stage 1 project, a project that's funded and is in a stable jurisdiction. Hopefully, you get a feel that we have a range of technical attributes that gives us real flexibility and diversity in the marketplace. Large flake size, the ability to purify to very high levels at low cost, and this wonderful, highly crystalline structure through many parts of our deposit, all originating from Australia. Thank you very much. Appreciate it.